Are you a business owner who relies on one of these to generate sales and revenue for your business? That would be your phone, ladies and gentlemen. We're going to be talking about that tonight, talking about how important it is that that phone gets answered, and every unanswered call is doing your business a lot of dough. We're also talking about tax planning tonight. We've got a special guest on, and stay tuned. We'll be right back after this. Welcome along back to Crown Business TV tonight, ladies and gentlemen, the place where business owners and entrepreneurs receive valuable insight and takeaway information to improving their profitability. And if it's your first time here this evening, I'm the founder and owner of Crown Business Development. We're a consulting and coaching firm helping the owners of small to medium-sized businesses accelerate their business growth through developing and helping implement strategies in the areas of planning, business systems, but most important of all, improving profitability. Tonight, we've got a special show with you. First of all, though, if you want a free white paper that I've got for you, which is mentioned in the comments below, where you can grab that, and it's full of tips and techniques on showing you how to double your business income in the shortest, fastest, and most profitable way possible. So diving right in tonight, we've got a special guest, Brad Stewart of Stewart Private Accounting, joining us to talk about the up-and-coming tax season, end of financial year approaching. But first of all, I want to discuss with you the importance of making sure your phone gets answered at your business. If you rely on inbound leads coming in via the phone and it goes unanswered, well, it's doing your business a lot of dough. Now, I want to show you an example of that right now. My mentor once told me that most businesses fail due to conversations they never had, right? So if that's you, if you've got having business conversations over the phone and it doesn't get answered, well, they could be new leads slipping away, and we all know what the detriment of that can be. And we're going to discuss that with you right now. So I'm just going to share my screen quickly and discuss with you. Of course, we're talking about customers, and whenever we talk about strategies or marketing tips, we always refer to what the lifetime value of that customer is. Now, I'm going to give you an example right now of a hairdresser, for an example. So to work out the lifetime value of that client, we first of all want to establish, okay, well, what is it worth each time a haircut comes in? Well, we have $30 there. Let's just say they come in 10 months of the year for a haircut, right? That's $300 for 12 months. Now, if that client now stays with us for 10 years, well, that's an actual value now of $3,000, right? Now, if those calls come in via the telephone, right? And let's just say you have 20 calls per day come in via the telephone, and you answer 15 of those calls, right? That's 5 calls per day that are now unanswered, right? So I want to explain to you the value of those 5 calls not getting answered right now, folks. And to explain that in simple terms, if those 5 calls don't get answered, one of those calls is possibly a new client. So that's $3,000 now, because that's one client that could possibly go down the drain, right? Reason being, I know if I'm ringing up for a haircut and I don't get it where I prefer to go, and I might be really needing to book in somewhere soon, want to get it done. I might have an event coming up, it needs to be done. Well, if it doesn't get answered and I go elsewhere, I'm going to take my dollars elsewhere, aren't I? Right? So that's not just $30 haircut that's down the drain. It's going to be $3,000 because that customer's gone elsewhere and going to be taken care of by someone else, right? Now, you might be saying to yourself right now, well, 20 calls a day, it's very difficult to get to all of them, Harvey, and you're right, I don't blame you. But let's look at replacing yourself answering all those calls with someone like a virtual assistant, right, that is on a monthly fee. You don't have to pay them their taxes, and you don't have to pay them their superannuation, all that, and do it in-house, right? And you've got a virtual assistant on board. In fact, I was just doing this the other day, about $1,500 per month for a virtual assistant to come on board and answer calls which are diverted to that voice assistant, virtual assistant. Now, those calls are getting answered every time without fail, using the exact script that we give them and the exact instructions that we give that virtual assistant to do. So now if those calls are getting answered every time, right, we're not going to be losing these customers that could be going elsewhere, right? It's going to cost us about $1,500 a month to have that virtual assistant there, right? So already we're $1,500 in front by making sure that those calls get answered, right? So it's very, very easy to quickly work out that just one unanswered call can be the result of lost business up to the value of what one customer is worth to your business, right? So I would encourage you to take that into consideration. If you rely on like a hairdresser or it could be physiotherapist, it could be a makeup artist that relies heavily on inbound leads via the telephone to generate business for your generate sales for your business. All right, so I highly encourage you to consider that moving forward. It was a topic that stuck on my mind most of this week, and I wanted to encourage business owners that rely heavily on the telephone to encourage that call gets answered each and every time without fail. I know a lot of business owners are heavy in the day-to-day running of their business. It doesn't quite get answered every time, but consider the fact that what your customer lifetime value is worth. If those dollars go elsewhere, well, then you've pretty much paid for your assistant to come on board and make sure that those calls get answered, haven't you? So encourage you to do that. Stay with us, folks. We're coming back very, very shortly with Brad Stewart of Stewart Private Accounting. Will be with us in just a moment. Sorry, I'm not sure what happened there. I hit the wrong video, but we're just going to bring Brad in very shortly. Now, Brad is the owner and founder of Stewart Private Accounting. Brad has over 15 years of public accounting and consulting experience with a diverse knowledge across the accounting and taxation spectrum. He's worked for the largest accounting organisations in Australia, dealing with privately owned business and high net worth individuals. He has a particular focus on advising his clients on how to maximise superannuation as overall tax and wealth management strategies. I'm just going to bring Brad into the stream now. How are you going this evening tonight, Brad? Thanks for joining us, mate.
Hi, Harvey. Thanks.
Awesome, mate. Brad, we're approaching the end of financial year, and a lot of things will be on the minds of business owners right now, getting things prepared for the tax season. And I think it's very important to cover off on taxation planning, particularly businesses that have done well in the last 12 months, about planning the right to obviously make the most of their taxation dollars in their own favour. And what's your sort of take on that, mate, as far as proper planning for tax dollars leading up to June 30?
Yeah, thanks for the intro, Harvey. Look, I would say that between April and June each year, you should be having a tax planning meeting with your accountant, and particularly if you're a business owner. Now, there's lots of advantages of a tax planning meeting, and it goes beyond taxation. I suppose where it all starts is looking at your numbers. And what I mean by that is what we do at Stewart Private is, let's say we meet the client in April, we have a look at their profit and their performance to the end of April. We then project out what their year is going to look like. And that helps the client see what their yearly profit is going to be. Now, yes, it can be a guesstimate in that you are making some assumptions, but generally speaking, you can make some pretty good estimates on what's going to happen. Now, by doing that, it allows you to see your profit for the year and how successful or how unsuccessful, I suppose, the year has been. And that I suppose, allows the business owner to potentially put some action plans in place, with their systems, procedures, new clients, all of those sorts of things for the year ahead, okay? In terms of tax, what it allows us to do is basically calculate your tax position. And the process that we go through is we look at, well, if we do nothing, this is what your tax is going to be. But if we do steps A, B, and C, your tax could be X. Now, the whole idea behind that is to show people that by making simple changes and doing things that I suppose by 30 June, they can receive some benefits, but also save tax along the way. What falls out of that, Harvey, as well, is cash flow. So quite often I speak with new clients that come along and they really have no idea of what taxes are coming up throughout the year. So, for example, a lot of business owners pay their tax on a quarterly basis alongside their GST, and the ATO like to vary that a lot, okay? By having a tax planning meeting, we can project out what your quarterly instalments may look like, so you know throughout the year what you're up for. So we can then go and produce a cash flow model, if that's what you want to do, to actually see, well, every quarter I've got to pay $20,000 of tax, okay? And then what the ATO also do is they generally make you pay tax based on the year before. So they look at your tax for the year before and they say, well, you paid $100,000 of tax last year, so this year coming up, you need to pay $105,000 of tax. So they have a little compensation factor that they put into it, which they've actually paused for the year ahead due to COVID. But that may not be appropriate. So it allows us to look and vary those instalments for the year ahead, so you're not paying too much tax along the year. Does that all make sense, Harvey?
Absolutely, mate. Is there anything COVID related that to do with accounting and the financial side of things for business owners that they need to tick boxes on, or anything leading up to or through the tax planning period between now and the end of June?
Well, I suppose there's a few things COVID related. So some of the initiatives that came out. So some businesses will have received the cash flow boost. Now that it doesn't so much cause tax issues now because it's a tax-free payment. So it I suppose creates tax-free income, which is great. So it's important that it doesn't get included as income for taxation purposes. It's also important for management reasons that you don't include that as, I suppose, ongoing revenue for obvious reasons, because it's not going to last forever. So you've really got to strip that out and look at, when you're looking at the performance of your business, you strip out the cash flow boost, okay? And you really look at the performance of the business less the cash flow boost. The other thing you also need to look at is JobKeeper. So the JobKeeper payment is obviously assessable income. So that needs to be factored in as well. So it's important that if you are receiving JobKeeper, the reimbursements that you get from the ATO offset your wages bill, and you're making sure you're keeping track of that. I suppose the other thing, some people, well, not some people, a hell of a lot of people accessed their super during the COVID crisis, the $10,000 super access. Now that's tax-free as well. So that was a really handy bonus for people. I suppose you could call it a bonus. It is your own money, but the benefit of it was tax-free. So you can pull the money out tax-free, so you can set and forget about that payment. I suppose coming out of COVID, from a tax perspective, it's also really important that you review your June quarterly instalments. And what I mean by that is, again, this is another reason why you have tax planning. But like I said before, a lot of businesses pay tax on a quarterly basis. So they might pay tax $20,000 every quarter, let's say. So that's $80,000 over the course of a year. By doing tax planning, you might go, well, because of COVID, my income and my profit for the year is substantially down. Therefore, I've paid, say, $60,000 a year to date, but I actually don't need to pay the June instalment because my profit is going to be down. I've already paid enough tax. So that helps you with your cash flow by simply doing that projection and looking what your profit is going to be. You're potentially saving yourself $20,000 of cash flow because you will eventually get it back. But why pay the ATO if you don't need to? You know, the $20,000 in your pocket is much better than handing it to the ATO and getting it back 6 months later.
What about the financing and the loans from banks? Like we talk about tax planning, but the area of cash flow and cash flow planning as well you kind of need to think fairly long term during this period right now as far as the cash flow goes, because of the fact that these are all loans, they're not handouts that business owners are receiving off the back of COVID. Have you had any experience with that right now of saying, well, hang on a minute, we've got to really extend our planning further ahead here to be able to say, from a cash flow point of view, can we sustain things, till this time next year as healthy as we are now? Anything like that you've had to deal with lately and that business owners should be fairly aware of right now?
Yeah, look, great question, Harvey. I think the real thing to look at there is, I think there are some businesses out there that are being artificially stimulated by things like the cash flow boost and the JobKeeper. So, for example, with the JobKeeper, there are businesses out there that are trading, they're paying their staff and they're receiving the JobKeeper reimbursement, which is really helping them at the moment. It is a great initiative, but it is temporary. And if your business was struggling pre-COVID, I would dare say that post-COVID it's going to struggle as well, particularly without the initiatives. So it is worth, and look, there's people out there looking at restructuring businesses to make sure that they can see, the next 18 months through, particularly given that we're going into potentially a recession. People do close their checkbook, so to speak. I think in terms of finance, Harvey, one thing that I did do prior to all the lockdowns was making sure my clients had access to capital, lines of credit, loans, all those in place before we went into lockdown. I think the lending the lending arena has changed significantly, and getting a loan now is difficult. Banks want to see cash flows. If you're a business and you're going to one of the big four for a business loan, they're going to ask you, more often they're not going to ask you for a cash flow forecast. The reason why they want that is obviously to see that when they factor in the debt repayments, that you can afford it. They also want to see that you're servicing all your other debts, like the ATO. Unfortunately, one of the hidden, I suppose, one of the things that I've noticed is that the ATO have really taken their foot off the accelerator in terms of collecting debts at the moment. So some people are, I suppose, waiving their payments to the ATO and thinking, well, we'll get back on to the ATO once things improve. I suppose the bogeyman's going to get you at some stage, so to speak, and you really need to keep that in the back of your mind. But going back to the banks and the COVID-19 lending, I actually didn't really have any success with any banks getting the $250,000 line of credit. Basically, the banks closed their doors with that, even though the government really wanted the banks to extend lending. They actually only did it for their top, for their clients who actually were in their top echelon of profitability and lending criteria. Right. So a lot of people tried to get finance under the 250 but didn't get it.
Yeah, so that was the financing arrangement that the government was guaranteeing for 50%. Is that correct? The financing you're talking about?
I don't know too many people who got it, and those who did probably didn't really need it. And what I mean by that is they were already going very well, and they just had it as a safety net. Okay, so that was one of the things we did with some of our clients was we built them a war chest, so to speak, of cash and capital, so that if things really did hit the skids, they had access to capital. But the banks were extremely difficult to get funds out of.
Yeah, and I guess to finish off on, like, the good thing is that out of COVID is that there's a lot of businesses out there that have done quite well, and now approaching the end of financial year, and a lot of that money has come in this year throughout COVID. Tax planning is going to be quite key for those businesses between now and June 30 to make sure that it's less taxes paid to the government as possible, and that's certainly where you can help them out. So, Brad, if you wouldn't mind, if someone was keen to contact you as far as a tax planning strategy or a chat with you, how would they best get in touch with you, mate?
Look, you call our office on 086 454 0235, or you can email us at info@stewartprivate.com.au. Alternatively, you can contact us on Facebook. We've got a Facebook website at Stewart Private. Obviously got a website, www.stewartprivate.com.au. So there's multiple ways you can contact me. I'm sure you'll be able to find one of those.
No worries. We'll get that information in the comments below, mate, and someone can reach out quite quickly. But I think that's great advice to spend some time on tax planning and to give you a buzz and sit down and go through some figures in regards to where savings can be made this financial year. So thanks for joining us tonight, Brad. Really appreciate it, mate, and all the best to you and your clients for the remainder of the year.
Fantastic. Thanks, Harvey.
No worries, Brad. Speak soon, mate. Well, there you have it, folks. Tax planning, vital stuff coming up for all business owners between, the 17th of June. So for the next couple of weeks at least, to get involved with your taxation planning. But, from my point of view, make sure that it's taken care of. And I don't necessarily mean you diving into it yourself. Make sure your books are up to date and your accounting is taken care of. And putting your business in the hands of someone like Brad Stewart at Stewart Private Accounting to be able to help your business with tax planning, I think is a vital part of being able to really, really look after those hard-earned dollars that you've worked so hard to keep. COVID or not COVID, every business reaches this point of the year where it's vital that tax planning is a big issue, and hopefully Brad can help you out there. Thanks for joining us this week, ladies and gentlemen. Crown Business TV. I did promise you business marketing automation this week. Next week, we'll have that on the table for you. So look forward to speaking with you then. If you have any questions or comments, drop them in the comments below and we'll make sure they get answered as quickly as possible to you. And we'll have Brad's information in the comments very shortly as well. So thanks for joining us again, ladies and gentlemen. We'll speak to you all again very soon. Bye for now.